All right, so now let's talk a little bit about valuations and what a valuation is. Every company, whether you've owned it for a year or 5 years or 20 years, should know what their current market value is. And a proper valuation will break down and figure out what your value is today. So if somebody comes and offers you something, or if you're looking to actually sell and get out of the business, you know what it's worth. But that is not the only reason you should do a valuation. You may not be thinking about exiting your business anytime soon, but whether it's 2 or 3 years out, you want to start making those decisions today for your exit, even if it's several years away from now. Because that's the only way that you're going to be able to make the changes necessary to bring your market value to its highest peak ever. Now, most of the time when we get a phone call, it's too late. People's valuation, that you do on that day, you can't really do anything at the time that somebody's looking to sell to make that valuation better. You're kind of stuck with what you got. So again, start that early and often. We recommend that people go through the valuation process at least 2 to 3 times per year, just so that they're constantly staying ahead of that. Now, what's important for evaluation? What paperwork's necessary? What is the process? Well, the first thing that we would go through is we actually want to go through your financials. Now, there's all sorts of financials as far as what we consider to be not so good financials all the way to great financials. Generally speaking, if you are a good business owner, you'll be keeping your P&Ls, you'll be keeping your balance sheets, and those are the 2 things that are most important to us. It might be an income statement, which is kind of the same as a P&L if you're working through a CPA. But those P&Ls, what we like to look at is your profit and loss for the last 3 years, and we really want to look at least your balance statement as of today. Now, once we've gone through that, we're going to go through an interview process with you as the owner to really break down and figure out what are the true costs of running this business. And we go through a process called recasting your numbers and your financials. That recast is going through and really figuring out on a year-to-year basis what it really costs to run your business and give you the maximum value as you go through that. Now, the 2 other things that you should be aware of, we go through a weighting process. And that's not waiting like I'm waiting for the bus, it's waiting like weight heaviness. And we look at the last 3 years over 100%, and we break down those years to really put focus on the years that are most important based on what may have happened within your industry. Great example is COVID. If you look at when COVID hit in 2020, that's usually a year for a lot of businesses where those businesses weren't even able to be open. So we would weight that much lower than we might this last current year. The other thing we look at is what's called an industry multiplier. And that multiplier is going to be based on a few things. There's usually a range, but a big piece of getting that higher multiplier is going to be how clean you run your business. Do you put a lot of your owners' costs and expenses through that business, which a lot of owners do? Is that it, or are you really an EBITDA-based company where your numbers are very, very clean? But those are all the factors that we look at when we go through a valuation process. And again, if you want more information on that, please contact us and we're happy to walk you through that process.